The Behemoth Brewing Company presents the Department of Conversation with Pat Brittenden. Behemoth, give me something hoppy.
G'day team, welcome back to the Department of Conversation with me, Pat Brittenden. Thanks to the guys from Behemoth Brewery for sponsoring our conversations, especially today. You probably need to pull up a frickin' seat and a beer today, don't you think, Darcy, to have this conversation around the so-called housing crisis. We'll get to that term very, very shortly. But joining me, Darcy Ungaro from Ungaro Co, a financial advisor and podcaster of the Everyday Investor podcast. So if people want to find out more about investing and about investors and about all things finance, they can go and check that out. We'll give you more details as to how to find that a bit later on. But Darcy, thanks for joining us.
Really appreciate it, Pat. Thanks for having me on.
Yeah, you're welcome. Look, I thought it would be good to have a bit of a chat. People know this kind of podcast is a bit sort of free-flowing and we chat about whatever shit falls in front of the microphone and out of our mouths. But occasionally we do kind of drill into something a bit more specific. And I think for me, I've been wanting to talk to you, and we've been going backwards and forwards for a few weeks now about the and I'm going to continue to say so-called housing crisis. I'll explain later why I'm using the word so-called at the start for a while. So I want to have a bit of a chat about that. For full transparency, we approached a few politicians to see if they wanted to come on as well, to say what we were going to do is kind of have a poly for the first 10-15 minutes, kind of get their take on it, and then we would have continued on because I'm smaller than a flea's testicles. No one will want to come on with me, so it hasn't happened. So it's just me and you talking shit, basically.
That's awesome. Well, I think what we have to offer surely is better than any politician, right? Surely.
Perhaps. All right. Now, this conversation, I think, is bigger than perhaps even a lot of the New Zealand media are talking about it, because I think there is a macro conversation around the so-called housing crisis worldwide, what's happening with housing and rental and house prices and affordability worldwide. Then there is the New Zealand conversation, and then there is the conversation of the last week or so, couple of weeks or so, whenever the announcement was made, about how the government, and I won't say the Labour government because National, when they were in charge, were having the same conversation. So the New Zealand government, whoever they happen to be, supposedly are going to, quote unquote, fix the, quote unquote, housing crisis. So should we look at the big picture first? Should we look at the worldwide picture to do with housing and affordability and that, and where we're at, and just jump away, my friend?
I will jump away. I love this style. Like with my podcast, it's something that I always strive for, is trying to have a conversation. So finally, we get to have a conversation. It's just not on my show. So
well, you can upload my show to your show if you want. No problem.
There you go. Well, I think I might. I think that's great. Now, I always think, right, whenever you sort of go specific on anything or you want to look at something closely, it's really good to zoom out, right? So if in doubt, zoom out. Look as high as you can on top of a situation globally. What does it look like? We have central banks around the world. The Fed, Bank of Canada, Bank of Australia, Reserve Bank of New Zealand. We're all kind of moving lockstep in a new regime where the price of money is kept ultra, ultra low. In other words, interest rates are super, super low. And that's not a New Zealand specific thing. I think most people are aware that we are in a record low territory for interest rates in New Zealand. And when I say interest rates, I usually talk about the official cash rate first and foremost, but indirectly connected to that is what you would pay on a mortgage rate, right? So interest rates have never been this cheap. Yeah. Certainly for this long, but that's not a New Zealand specific phenomenon.
Well, actually, in New Zealand, it's more expensive than other places in the world, because I'm pretty sure, not right now, but when the global financial crisis hit and when some other things affected economies around the world, the equivalent of the OCR in America went to zero when we were still at like one basis points or 1%, whatever the correct terminology is. Yeah. And I think at the moment,
more expensive. Yeah. Everything's more expensive, and it takes longer to get here, right?
Yeah. So actually, other parts of the world, things are even cheaper. I think at the moment, correct me if I'm wrong, I don't keep up with as much as I would. What is it at the moment? It's either 0.25 or 0.5% is the OCR.
Correct, 0.25.
Yes, and that's like it's basically as close to zero as you can possibly go, because they only move at 25 basis points at a time. So other than that, the next port of call is zero, and that's pretty unlikely.
Correct. So now we have a situation, and layering the pandemic on top of that, which is the reason why central banks have gone to this new low, However, should I say it's a reason? No, I'm not even going to be that generous.
Contributing factor?
It's no, I'd actually go so far as to say it's a scapegoat. We were on this trajectory. We were on this trajectory before COVID happened. Like everything, COVID accelerates everything. There was already a long-term trend in place for falling interest rates globally. And I always view this as interest rates, or little r, that's the cost of money. Declining interest rates over a 40-year period, more or less, is what we've seen. That's a symptom of a system dying. That's not just something oscillating around an average. That's something that's actually declining down to zero. And it's like folding a bit of paper. You can only fold it so many times before you it's just impossible, right? Or you chop something in half so much, eventually it just loses locality. You can't see it anymore. It's gone.
Yeah.
You can get really close to zero without hitting it, but as you're on that descent, it gets flat for a long time. And I think we might see some little variances with interest rates, bounces up and down, but ultimately we're in a very tight range. We're wedged in between a rock and a hard place. And all reserve banks, because they're moving in unison, any jurisdiction that hasn't had the sickness gets the cure. In other words, we kind of have to have low interest rates, even though our economy seems to be moving forward, or it seems to be a little bit ahead with other economies because we haven't been locked down as much. But if we raised our interest rates, there's a whole other mess that happens. One of them is it pushes our dollar sky high, and that creates other problems as well. Mm-hmm. So we kind of have to move in lockstep. And what that means is that, or even before I get to what that means for New Zealanders, internationally, what that has done is that when the cost of money gets cheap, and this is a bit of, I don't know a lot about Austrian economics, but what I do know makes a lot of sense. And when the price of money gets cheap, money always flows to where there's a higher return. So when the price of money is cheap, in other words, interest rates are cheap, share markets go up.
Yep.
When the price of money is cheap, real estate goes up.
So let me jump in because I am the layman, because I love being the dumbest person in the room, and that certainly is the case again today. But what you're basically saying for people who are on my level of mentalness is that someone can't put their money in the bank and get 4%. Because rates, the OCR, are so low. At the moment, I think you can get like less than 1%. So if you've got $1 million in the bank, you're getting like $10,000 back a year for that investment. If you spend $1 million on a property and you rent it out for $600 a week, that's what? That's 30,000. That's 3%.
30 grand a year.
So that's 3%. Yeah. So driving to the places, as you're saying, and property in New Zealand especially has been one of those cast iron investment things where people have been able to either make money on it or have someone else pay off the mortgage and then sell it to make to make their money back.
Correct. So I guess the difference between a term deposit and a rental property, a term deposit, you park the money in the bank and you get, say, your $10,000 a year on $1 million, then you have to pay tax on it. And then at best, you're withdrawing that $1 million to spend it. But really that interest payment was a partial reimbursement for the fact that the purchasing power of that $1 million has actually decreased in the period of time that it was sitting in the bank. Whereas a property is very different. It produces income, kind of like an interest rate, I guess, like a rate of return, but it's going up because it's a finite asset, whereas currency is an infinite asset that can be printed by governments. So one goes down, one goes up. So therefore, what you do is
that's the point. That's the point I left out. So your $1 million property earns you $30,000 a year, but it also grows in value from $50,000 to $100,000. So on paper, it's like you've made $130,000 in that year, rather than $10,000 by having it on a term deposit.
Exactly. And so like the strategy is simple, right? All you do is you stand in between declining value of currency and appreciating value of assets, and you're the exchange. In other words, you take your money, and this is what a lot of people have done, not just with property, but they've taken the money that they do have, whether it's their your wage subsidy or your stimulus check if you're in the US, you take that money or your savings from your term deposit and you put it into an asset like property, shares, gold, whatever it is, because we know that those are finite. And so you're taking something from the infinite realm, putting it in the finite realm, hoping that can generate more of that infinite cash later on. So that's kind of been what's happening, especially in the last 12 months, right?
Let me just ask you this as well, because I'm going to jump in a lot because I want to make sure I'm clear.
Good.
You're using the word finite, and that's what you literally mean. There is a finite number of houses. There is a finite kilogram weight of gold on the earth. It's not endless. Whereas money is infinite. I mean, we're getting to a stage of a cashless society. Actually, money isn't even physical thing. It's infinite. A government could just order another $1 trillion if they wanted to. Is that basically what we're saying?
And they do. So it's, and just to clarify with property, it's the land that we're talking about, not the thing on top, right? Because obviously you could have a small parcel of land and just build up to the heavens, right? But it's the land. So when we want to own land, or we're a property investor, we want to own the land, right? The thing on top is actually a liability. But yeah, you're right. Governments can create an infinite amount of money supply. Like if you look at the amount of new money that was created last year in the United States alone. I might sound like I'm American, but I'm not, by the way. I'm Canadian, so don't even think it, man. Don't even say it. So if we look at the last year alone, I've heard it's called I think they call it M1 or M2. I'm not quite sure, but basically the new currency that gets created by the central bank was 25% of overall money supply was created in just the last 12 months. So in just the last 12 months, the money supply in the U.S. has increased by 25%. Don't quote me on those exact numbers, but I'm pretty sure those are close.
But does that mean that an additional 25? I'm gonna actually quite a bit come back to a household budget, because I think looking at the biggest picture, sometimes it's good to think about how it works economically on a smaller budget.
Perfectly.
So are you saying that if the economy of America, let's say pre-COVID, was floating around $100? Now they're floating around 125. They've added another 25% to it without removing any of the others.
You got it. You
wow.
nailed it.
Okay.
So there's a quarter more in the system within a 12-month period. So that money goes somewhere, right? And if we think about this from a household level, people aren't going out, and so the savings balances in the United States have gone through the roof. Normal households never save this amount. So savings accounts have increased because of that. They haven't been spending as much. A lot of them will be opening up Robinhood accounts and getting into online share investing.
Bitcoin and stuff.
Yeah, Bitcoin's going through the roof. So a lot of these assets are sucking up this extra currency that's being created. And that is one of the reasons why we have seen, it's probably the primary reason, to be honest, why we've seen a rise in share markets and in property markets, is because number one, the cost of money is cheap, and number two, the supply of money has increased. Both of those things are driving these asset prices, because whenever you have money creation, whenever a government decides to create new currency, I shouldn't say whenever, but often the first thing to feel it, or I guess if you imagine a rat moving through the body of a snake, the first thing that you feel is asset price inflation. That's not a permanent thing, in my opinion. I don't think that's necessarily going to be permanent, because you can withdraw the cash, you can convert that asset back to cash, especially if you need to. Then you see that move into consumer inflation. And consumer inflation is really simple, and I've heard a lot of definitions of inflation, but just to, I guess, clarify what I mean by inflation. Whenever you have more currency in a system chasing fewer goods and services, you generally have rising price levels. So think about where we're at right now, 12 months.
It's a supply and demand. It's a supply and demand thing. You got 10 people looking at one item, the price goes up, versus 10 people looking at 10 items.
Yeah. I was trying to, my wife's birthday is in a couple of days, and I was trying to buy a couple of things for her. One of them was just a watch band for her watch. I've been looking since Christmas time. I can see it online, and it's on their websites at JB Hi-Fi. Not in stock. Got to order it in. It's held up. It's harder to. And where else was I? I was in well, this was JB Hi-Fi again. Like, they were basically just, like, a lot of retailers are just spreading their stock out over the shelves, because to make it look like they have stuff, but everything's stuck in transit. There's not enough supplies, like timber, finding it harder to get. I've read about that this morning, where timber supplies are getting harder to find. And so when you have a situation where you have more currency in the system and less goods at the same time, that is that is prime primed for inflation. There just needs to be a match lit. And I think the match to be lit here, in my opinion, could be a pullback in share markets or the property market. People withdraw some of the assets, convert it back to cash, and spend it. And that's when we have a bigger problem, because that's when inflation will kick in. But remember what I said before, we're all kind of forced to take the medicine even though we don't have the sickness.
Yeah.
We cannot raise interest rates to offset inflation, or not as easily anymore. And so what that means is that our dollars, if you make $50,000 a year, in 10 years' time, we won't be able to buy $50,000 worth of goods or services. Maybe it's only $25,000 or less. Who knows?
Well, I mean,
that's why we have to invest.
I mean, silly example. I watched that film Dolomite. Eddie Murphy's new Dolomite film on Netflix last night, and I was really interested. I was really interested at the movie that he made about this guy making a movie. So I looked up the original movie, and just an example of what you can buy with it. At the box office, it took $12 million in 1975. If you had that $12 million today, it cost them $100,000 to make. It would get you far less than the equivalent amount based on the inflation between then and now would be 120 million. So basically what you can buy today for 120 million, you probably could have bought in 1975 for 12 million. So if you had that original 12 million, you ain't getting anywhere near, what that would pay for, 40 years later, 50 years later, holy mackerel. So the value of money going down, but then that's when the property market kicks in. And I heard you say that you don't think asset inflation is a permanent thing. When you look at, for example, houses, though, whilst there has been some dips and there are plateaus, like GFC in 2008 was your probably most reasonable dip of this generation, you still follow that trend line, and they do tend to always go up, and everyone's always talking about the bust coming, and even when there is a correction, 2, 3, 4 years later, it's still on the way up again.
That's right. So, and it's the reasons change, but the reality is persistent in that roughly every 10 years in New Zealand, property prices seem to double, roughly. So that reality, I don't think there's going to be a change to that reality. I think we've gone through a very short burst of screaming back up and catching up to a trend line, which we may have been actually below. So I think that property prices, especially in the last 12 months, it's been quite surprising. It's caught a lot of us off guard. I remember doing a podcast last year around this topic, and it was pretty dark. A lot of in the media, it was really dark. Things were going down. There's going to be a severe crash. Prices will fall by at least 10%. And I remember just talking to these guys thinking, well, what if that's not actually true? What if, because of the cost of money, that more than offsets the fear and the panic in the market? And within 2 or 3 months of that podcast, it was clear that, in that case, one of the few cases I was probably calling it right. I don't call it right all the time, but that was quite an enjoyable one to get it right every now and then. But that the property market was ignited, because it was a third cheaper to borrow the same amount of money last year. So naturally, prices should go up by a third. So it's a funny thing, right? Like, I think that when you look at rising prices of assets, whether it's property or shares or your KiwiSaver balance, whatever it is, when you look at those things going up, there's this natural, I guess, fascination with increasing numbers. We anchor our emotions to it, and we feel either good or bad about that. Good about it if we're on the wave, bad about it if we're missing out. But a lot of that is actually just money creation. A lot of that is actually just somebody with a stroke of a pen or a keyboard strike somewhere at a central bank is actually the start of that process. The entire financial system is a gigantic, regulated, somewhat, Ponzi scheme, where no matter what it is, we're just drawing dollars into it and we're trying to build it up.
And isn't it also that they're trying to get it right? Well, obviously, they're trying to get it right because, I mean, I've got lying around the house somewhere like a $100 million bill from Zimbabwe. Because if they drive too much money into an economy and they make money worth too little, then all of a sudden you're needing a wheelbarrow full of money to go to the shop and buy, a loaf of bread. I mean, that's the extreme version. So you're talking about 25% more money in the American economy. I mean, at what point do they reach, for want of a better word, hyperinflation, where actually now that loaf of bread, which was costing them $3 or whatever, is now $33 because money is so nowhere near the same value it once was.
That's a good question. And I think, like, I've asked this question from people way smarter than me, and often the answer, I get two stories. One is the Weimar Republic example, where they're bringing a wheelbarrow load full of money and saying that that's actually where we're going. That's kind of one extreme viewpoint. The other one is, hey, you cannot actually have hyperinflation unless you have some sort of upheaval, like war, civil war,
Pandemic.
governmental change, pandemic, perhaps. Exactly. What are the chances of that happening? So yeah, I wouldn't necessarily suggest we're on a path to hyperinflation, but I would suggest that a lot of us are asleep at the wheel because we've been lulled into a false sense of security for a very long time with respect to inflation. We haven't seen very much inflation at all. Technology has been such a massive deflationary force that it's kind of been the driver, in my opinion. From what I understand, it feels like technology is forcing prices down. And even though some things are increasing, insurance, accommodation expenses, food seems to be increasing, technology, on the other hand, is forcing everything down. So it's not a homogenous piece, the whole inflation thing. We kind of have consumer goods that we need to live off of, and then we have discretionary goods. And sometimes they move at different paces of inflation, and then we have assets. But ultimately, where this all ends up is that people, whether it's on purpose or subconsciously, people will convert their money into what they feel is sound money for them. And that sound money isn't your $1 million. I'd love to see that, by the way. So what is it, like $1 million bill from Zimbabwe?
Oh yeah, I've got a little package of them. Once because I've obviously changed all that now, but once they when they got towards the end of, because the story that, as I understand it, is inflation got so much that they were having to spend, $100,000 in their old currency. They were literally coming with bundles of cash, and so obviously what the bank did, or the banks did, was they, rather than coming with $1 million in, 300 notes, they just made $1 million note. I think I've actually got $100 million one.
Wow.
So when they changed, however they fixed the system, and I'm sorry, I don't know the ins and outs of it, but at that end they got all the money back, and there was still those notes being printed. And then what they did was, some entrepreneurial person started selling them on the internet around the world. So I've got a few of them floating around, $1 trillion, $1 million bills, and whatever they are. And so sometimes I talk to my kids about, I'll give you $1 million if you do job X, Y, Z, and they go, of course. And then I hand them a Zimbabwean $1 million, and I've paid my debt.
Yeah. That's right. They'll cash in those chips at some stage, I'm sure.
So let's look at the housing in New Zealand part of this, because when you say people gravitate to putting that money into these kind of almost solid assets, I'm always reminded of hearing about property investment in New Zealand and hearing about how we as a people are particularly, I was going to say good at it. What I mean is, it's something that is very common in New Zealand compared to lots of parts of the world. But one of the arguments that I always used to hear about people investing in property, especially, you hear about your mom and pop investors, is that, should the share market rise or fall, should the, financial group fall over, should there be, you've actually always got the physical land and you've always got the physical bricks and mortar. So you always have something for that investment. Even if the price of the house drops, you've still got a physical entity, which is something that you can always have, rather than a portfolio which could be struck to zero overnight and then there's nothing you can tangibly have.
Yeah. I think it goes deep, right? I don't know much about your family, Pat, but I can speak from my perspective. I'm, what am I? Third generation Italian from Canada who moved here 25 years ago. In my blood is a line of people who have always strived, just like the chicken who wanted to cross the road. Why? Because it was better on the other side, right? Yeah. There's this natural desire with some of us, especially when you consider our lineage, to always head to a new frontier and stake your claim. And I think in New Zealand, we have a huge population of people of a similar mindset. That wears off, by the way, but people of our generation, let's just say that we're both in Gen X. I'm not quite I can't tell with the beard, but I'm guessing you're probably in the same zone as me, Pat. Yeah, we are still in that space where it feels like our right. It feels natural for us to stake our claim in the country that we want to live in and produce offspring in. So, it's not just about the bricks and mortar. It's not just about, I guess, the shows on TV that kind of amp it up. It goes deep within each of us that we are pioneers into a new land, and we want to make the most of it. We want to stake our claim for our own tribe. And that can't be underestimated, because I think what we've been seeing over the decades has simply just been an expression of that. And when we've been adding to our population, especially through immigration, I think that has heightened our sense of fear of missing out, because we've clearly seen other people value what we have more than we value it ourselves. And, in 87, when I moved here, why would you ever want to move here? The number one question that everybody else at school asked me, why would you ever want to move here? Kiwis had no idea how awesome this country was back then, mostly. That's changed. But I think what has changed it has been looking through the eyes of these newer arrivals into our country has opened our minds.
Yeah.
And so that feeds off of this fear of missing out. I want to stake my claim even faster now. And if I can't get it, it's going to really upset me. It's my right. How dare you take that right away from me? So that all that sort of stuff is happening possibly on a subconscious level. But I think what we're seeing now in the political space is we're being played a little bit, to be really blunt. There's divisive words, divisive phrases that are used by our political leaders designed to invoke these almost demonic forces within us to be angry and to be jealous and to be envious. And so that goes deep. That's like the number one thing. Then when you drop that into an environment like we're in right now, where worldwide we have rising house prices, in the US, in Australia, in Canada, we've seen 10 to 15% growth in the last 12 months. So the housing crisis, in quotation mark, it's not a New Zealand problem.
Yeah.
But it's almost being spun to us at the moment as if the people who are getting rained on, the people who are wet, should be punished. But it's actually raining outside. People who are actually owning property and trying to expand their own footprint, and they're trying to exercise their ambition, they're being punished simply because they're doing something that they're able to do. It's an interesting thing.
Well, let me also throw in there, I mean, you were talking about, I want my bit, I want my space, I want my bit of the dream. I think for a long time in New Zealand, I mean, it changed a bit with KiwiSaver, but certainly there was a retirement plan up to and including the 80s that then got removed from our society thanks to a national government. And then there was a long period of time from, let's say, the 80s to basically nowish, where the government didn't take care of our retired community very well financially. And so what our 40-year-old people were doing in the 1970s were saying, shit, I'd better be prepared for my retirement. Hey, we've got equity. Let's buy a couple of rental properties and they can provide for us in our retirement. So I think there's also the added element of not just I want my bit. It's not just that kind of, we're settling a new land and we want to be a part of the story. It's also, it's been for a while in this country, and I'm not talking about the investor with 108 houses, but it's also been for a while in this country. I want to provide for myself when I retire because our current social payments and stuff aren't going to keep me in the manner which I would like to be kept. Me saying that like that makes it sound like a first world problem. There'll be some people going, well, what bloody rich bastard. But what I'm saying is, for a long time, we didn't have a good social. And I'm not even saying we've got a good one now. We've got a better one now. But actually, KiwiSaver probably won't impact retirees positively for another 20 or 30 years after the people who started with it then retire with it. So I was always of the opinion, for a capital gains tax, is that people who owned houses prior to the retirement package, the word just jumped out of my head. I just said it a few seconds ago. Sure. KiwiSaver coming in.
Oh, right.
They should be exempt of it altogether, because a lot of those ones, especially if they have one or two properties, have been saving for their retirements. People who buy properties for their retirements after KiwiSaver came in, well, then you're kind of double dipping on some level.
Yeah.
That should be fine. And I know that might be hard to do, and means testing is always impossible in a government agency where a one rule for all kind of fits better. But I just wanted to also add in, there are those people who have, across our last 30 to 50 years, wanted to provide for themselves and their family, and they've seen the property investment market as a way of doing that, as well as the, I want my piece of the story, as well as the, I want to own 108 houses and this is actually my life now. So there's and unfortunately what happens when we have something that requires nuance is we tend to get the one size fits all, and people get caught up in it or fall through the gaps or whatever. And that's probably the kind of conversation you're having at the moment. We're seeing news stories coming out about someone who, there was one in Stuff a few days ago. I saw the headline that they interviewed both a property investor and a first home buyer in the same article, and they were like, these changes aren't going to do anything for us, and they're not going to help us or harm us. It's basically exactly the same, because the property investor was just going to keep all his properties, not put them on the market, and the first home house buyer wasn't going to see a drop in prices because fewer houses are going to come on the market now. Supply and demand means that prices probably aren't going to drop. I don't see it as a solution for that. Anyway, I've said a lot of words there. You jump in.
Yeah, there's a lot to unpack in that, and I think one of the things that I kind of find useful is to try to look at the little micro themes that kind of are woven through time. So with New Zealanders, for example, let's go back to 1986, 1987, and there was a lot of speculative fervor around the share market back then.
Yep, just before the crash.
Yep. There's those two, one and the same as far as I'm concerned. So like there was this intense pressure, like there was borrowing to invest, margin, there was leverage being applied. People were not doing any fundamental research. They were just going based on what the crowd thought. This should sound very familiar for those who understand what's going on right now, by the way. But that crowd or group thinking is very prevalent in New Zealand, and this is coming now from someone who wasn't born here. So I can kind of see this. Maybe I'm going to suggest maybe easier than some, because I'm coming from another outside perspective. But in New Zealand, there is a very massive group think culture, and I think that when something's a good idea, we all do it. When something's a bad idea, we all stop doing it. When the media says something is good or bad, we listen to it. When the government says something is good or bad, we listen to it. Mm-hmm. We're very, I guess you could say that that's compliant, but I view that more as groupthink. And I think that there's significant danger in that, because in this culture, it's hard to express your opinion because you don't want to be the one who's all by himself or herself with a point of view, because you'll get slammed by somebody on a different side of the spectrum who has done their research, one debating class in Form 5 or whatever it is, and brought you down to earth really quick, right? I'm not speaking from experience, by the way. So you've got this one thing, right, where 87 happened, people shy away from the stock market. That wasn't tangible enough. They move into the tangible, which is what you said before, and they move into property. Now that's their vehicle. Then we have, and I love how it's so true that National and Labour are almost indistinguishable in terms of making dumb decisions or good decisions. So I love how you mentioned it's the government. It's not a political party. It's the government.
And the irony is, this is one of the things that does frustrate me about our politics, is even though I certainly sit comfortably in the left, it frustrates the fuck out of me when people like John Key, even though like I am someone who has benefited from the interest-free student loans, when John Key gets in and says we're going to keep him, basically taking a massive left-wing policy and rubber stamping it, even though it's not a national policy and no national government would ever introduce it. It just makes me think they're all cowardly. It makes me think that National is the party to bring in a capital gains tax. They are the party for doing that kind of stuff. They never did it. I find it, I respect politics and politicians who stand by where they are, as much as no, that was going to be wrong. As much of society derides her. People like Sue Bradford, who went, this is what I stand by, I'm going to push through it no matter what people say. I respect that more. Whereas we do have kind of a purple centre at the moment that at the fringes of each of those parties, like if you talk about the progressive far left, even though it's not very far left in Labour Party, and the far right part of National, which aren't far right compared to the world, but in those perspectives, you can see some delineation there. But the chunk that's in the middle is very purple. And evidence is so is the capital gains tax. I've probably had 4 podcasts since we've won the election that have had political themes to them, and all of them I've been like, why the fuck aren't Labour ramming through a capital gains tax? They've got a majority in the House. They need more tax because of COVID. It fits beautifully with what they're trying to do, and it's because Jacinda made a promise. Jacinda made a promise that she wouldn't do it, so she's not going to. That's not how you run a country. Again, look, this is my rant. Okay, so here's part of my rant. I come back to my household income. I said this to someone last night. Like, my household income says, hey, Pat, it's time to upgrade your car. You're going to earn a car. Get a car this year. Good. That's part of my projection. I'm going to do it in the second half. Hey, guess what? Something happens and my income drops by half. So I change the fucking plan. You know what I mean? It's like, I hate it that both parties go, well, we made a promise, so we're not going to do it. Even though we're doing that thing because there's been a significant change like COVID tearing apart our economy is actually the right thing to do. But they stay the path to not lose face, rather than going, you know what, guys, we did say this at the election, but you will know this COVID thing that we did so well to keep you guys safe from. Well, that's cost more than we thought, so we are going to need to change what we thought and actually bring it in. Not try to do cloak and dagger bullshit like what they're doing at the moment, which is a capital gains tax by any other name, so Shakespeare said.
Yeah.
Sorry.
Yeah.
Sorry.
No, that's good, man. That's
my rant.
good.
I'll get off my soapbox now.
That's cool, man. But you're right. Like, what is leadership, right? So when we talk about politicians, what is leadership? Is leadership someone who has gone through tough things and they've gone there first, now they're turning around to bring others with them? Is that what leadership is? That's what I thought it was. Or is leadership just trying to understand what the bulk of people already want and then just be driven by that and give it to them?
The bulk of people, bulk of people are fucking idiots. I'm a fucking idiot. The bulk of us don't have a clue what we need to have in our tax forms and our whatevers for this country. The bulk of us would go, hey, I'd like to pay no tax. Let's see how that works out. You know, it's ridiculous. We elect a body of people to run the country. The ones who run it best should get to stay on and keep doing it. If this group fuck up and we go, you guys have completely dropped the ball on this, which obviously they didn't do last time, which is why it's the first majority in government ever under MMP. That's why they've got a majority. But if they fuck up this time around, then next time the country en masse is going to go, you guys didn't do well enough, we're going to get someone else. You know, we elect them to do their jobs. They should do their jobs. We need more tax because of COVID. I said to the same conversation I was having last night. This capital gains tax, by any other name, still smells as sweet, is said to be bringing in 500 million to a billion a year. The fucking cannabis referendum would have brought in $500 million a year. There's $1.5 billion a year that we could have had in tax takes that these guys are pussyfooting around. It's like, and
you know what would have got the cannabis
tax
bill through, right? Like you know what would have got the cannabis bill through.
Not everyone being fucking idiots.
Well, also just leadership. At any stage, did our fearless leader actually say what she believed in?
Yeah. Look, I know you said that we might, you might use a bit of this stuff on your podcast and stuff. The last few rants obviously will be deleted altogether, but you've hit a nerve, because the other thing about this, and this is why at the start of the podcast I should probably get back to it. I was talking about the supposed housing crisis. The housing crisis. This is what the housing crisis is, as we're being told. People can't afford houses. That's the housing crisis. Now, is that a crisis? There are other parts of the world, through Europe and stuff, that the community and the society don't believe in owning houses like we do here in New Zealand. Coming back to the point you said about having your bit. And they accept and they are okay with renting their whole lives. Now, what those countries have is laws and rules around renting that enable someone to rent a place for their whole life. So they can get that ownership, they can get that, and they're not at fear of being turfed out on the air because, their son's going to university next year, so you can get out now, tenant who I've had for 9 years. And they're putting protections in place for renters that enable them to get that, this is my space, this is my chunk of land. This is my house. Oh, I want to change the color of the paint. And this is the landlord that I'm paying it to. So I think we need to come all the way back and go, what is this housing crisis? It's we can't afford houses, apparently. Is that really a crisis? Do we need to repackage this and go, you know what? Rather than both of these major parties promising us to bring house prices down, can I just say this on record? It's never going to happen. House prices are not going to come down. In fact, this latest thing may drive house prices more because investors will want to get more money for that tax they're going to lose, and fewer houses are going to go on the market in those 10-year bright line test gaps, which means demand's going to go up anyway. So rather than this bullshit narrative by both major parties of bringing house prices down and making them more affordable, why doesn't one of them pivot and start talking about generating laws around rental properties that makes it so someone can have their home sweet home as a rental property and be okay with that?
I think like there's so many facets of that, right? So starting with the phrase housing crisis, it's akin to, drain the swamp, build the wall, tax loophole.
Yeah.
These obviously there's been a PR firm engaged at some stage, right? And it's not so much about defining is there, or asking the question, is there or is there not a housing crisis? It's more like, why has that been injected into the discussion? Why are we arguing about that? And why are we trying to go on a witch hunt, or be encouraged to go on a witch hunt to discover who's responsible? It's either the government, or no, it's first home buyers, it's property buyers, it's overseas people. Somebody has to be to blame, right? So why are we going down that path? And that's what fascinates me, because we need, again, I'll go back to leadership. We need leadership in this country that unifies us, not divides us. And that doesn't mean that we just appeal to one side of the spectrum and we go to the left, who will be more vocal, especially on media. They'll be more vocal. Therefore, people from the opposite, they'll shut down. So that's what's been happening in the past 4 or 5 years, probably, is that the people with an opinion are too scared because of this groupthink mentality. They're too scared to speak up against it on either side.
Start a podcast. Just say what you want. Start a podcast.
Yeah. So we do need to change the narrative, though, I think. Like if right now, roughly 33% of households do not own the home they're living in. I think that's what I read on statistics website a couple of days ago. So 33%. Yes, that has been, the share of home ownership has been decreasing, but only very slightly. And so I would then go so far as to say, and this is kind of, I read something that Chloe Swarbrook said on an article where it almost implied that if you got rid of property investors from buying property, first home buyers would finally get a chance to get in the market. And we would have higher ratios of those who are living in households actually owning the property that they're in. So that may be true, but where is the evidence? We often just kind of hear these little sound bites, accept them as gospel without actually testing them or asking for any sort of evidence. And just logically, the first thing that came to my mind was, I'd like that to be true, because I work every day with people who are trying to buy their first home, or people who are just trying to sell their home and move up the ladder and just get a nicer home for their growing family. Just honest, regular people. And I'd love it for them to be easier. But the one thing that keeps on like, I'm a property investor as well. I don't own a lot of properties.
You rich bastard. It's your fault. I blame you.
Yeah. I apologize on behalf of all the white middle class property investors in New Zealand, because I own more than one property. And the thing is that I know my tenants. I know 2 of my 3 tenants fairly well, and I know that one does not have any desire ever to own their own home. The other one would not be bankable even if he did want to buy his own home. So, and if the other one does that, I'm not quite sure. But the fact is that of the people who don't currently own their own home, it's a mistake to assume that they all want to, or can, or should. That's not true. There's only probably a very small amount of those who don't own their own home who can, want to, or should own their own home. Yes, we need to make it harder for them. I got my entire start with property because the lending rules were so much easier than they are today for first home buyers. I had a 5% deposit when I got my first home.
Yeah.
I was extremely fortunate. No one gave me money. I'm not, I didn't have a lot of money at the time to get started. I didn't get a massive inheritance or, the bank of mom and dad. I did it the hard way, but it was so much easier saving a 5% deposit than a 20% deposit. Why are we not making it easier on the lending criteria? This is what I have never been able to understand with these loan to valuation restrictions. It doesn't make any sense.
But look, this is why I think it's going to make no difference, because even on that point, right? So if we make it easier, and I actually want to take a step back, and if you give me a second, just to explain that I'm not the redneck bloody property investor like I'm sounding on the soapbox at the moment. I'll show you something that I wrote like 12 years ago. Is that if you make that easier, then you've got more people in the market buying houses, and then again, demand way outweighs supply, and house prices go up. So what I'm saying is there's actually not a solution to the house prices going up. And if there was, and somehow the government gerrymandered it and brought house prices down, what about Joe Bloggs, who's just put 95% debt on his house with a 5% deposit or whatever he's got, and now his house property's dropped by 20%, and the mortgage gets foreclosed on?
Just to clarify though, so let's assume that property investors from this moment on are sufficiently dissuaded from buying more property. So property investors, let's assume, become less active. And let's also assume that the property market stabilizes, where there's a very acceptable level of house price inflation of, say, 1% to 2% a year.
But why would property investors get less active? Let's
assume. Let's assume that the government is actually competent, capable, have a right, whatever it is.
Look, let me just say, I don't think it's about the government being competent. I don't want to make it sound like they're incompetent. I just don't think it's possible. I mean, if the Labor government promised 10,000 new houses, I stopped and I said to a bunch of people, where are those builders coming from? You think about how hard it is to get a builder today to come in the next month. Where do you think all these builders are coming from? I mean, literally coming from, to build these 10,000 new houses we're being told about all the time. I'm just saying it's all, and it's not Labor, it's Labor and National when they lead their prospective governments. It's all the same, and there's not a solution, in my opinion, in that area.
True. So when we bought our first home, though, the environment was actually surprisingly kind of similar-ish, where house prices were going up at a phenomenal pace and interest rates were fairly low, but people weren't buying because it wasn't again, the masses weren't yet awake to the fact of what was happening. And we went through a big run up before the 2008 global financial crisis, just like everywhere else did, but to a much lesser extent. And the rules, though, were a lot more liberal when people went to a bank. Property investors had a harder time getting a mortgage. They always have, but it wasn't hard enough relative to first home buyers. And I think the banks as a conduit for regulating the outflow of money to certain types of groups is far more effective than a government overlaying or a reserve bank overlaying macro prudential rules on top of a system. Ideally, you need to work with the existing players, work with and incentivize developers, release more land, work with the banks to develop criteria, which is trying to achieve the outcomes that you're trying to achieve as a regulator.
I don't want to sound like, you mentioned Chloe Swarbrick. I'll bring up something that Chloe put out the other day, which I really I thought was quite pertinent on her Facebook page. She said, many a mention of the mum and dad property investors today, some politicians noting their parents, nary a mention of a mum and dad renter, like my mum and dad. I think that's, whether you agree or disagree with the point, there's not many people talking about the renters at the moment, and she's talking about it from a different perspective from what I'm saying. What I'm saying is the mum and dad renters, we should figure out a way to make it easier for them to rent. That's the way to make this all happen. And I also think the idea of stopping investors, and I don't want to say the mum and dad investors, but the small time investors. I don't know how many houses you own, but let's say you own an extra house. You getting caught up in this is very different from the article I read about the person who owns 108 properties. Now, the person who owns 108 properties is not going to have a issue with getting, a 40% deposit as opposed to a 20% deposit. But people like yourself, like I don't own any other properties, just my house. But people who want to do a little bit better for themselves, they are going to get caught up in it. And that's that catch-all I'm talking about. That doesn't actually stop the 108 household investor, but it might stop, the young couple who do want to get ahead, do want to make a future for themselves, do want to get some money in the bank or some assets in the bank for their kids, for their future generations. So it's this again, this kind of nuanced conversation that we need to have, and it's being had, I think, with headlines and buzzwords. And it's going to make no difference. But let me look. I'm sort of going to defend myself a little bit here, because I don't want people to think as well that I'm a heartless bastard about people getting into houses. This is a blog when I was working at Newstalk ZB that I wrote. It was April 15th, 2009. I don't own this site anymore. Don't go looking for it. averagejoe.co.nz was what it was called. One of the ideas for helping people build wealth to send the countries around was to bring people out of poverty by owning houses, and by the government helping them own houses. So look, I just want to be aware that I'm not advocating for non-house ownership. What I'm trying to advocate for is realism. That's what I'm advocating for: honesty and realism. And my perspective, if the government of the day, whoever it might be, was honest with us, they would be saying this housing market kind of drives itself. We can't stop people wanting to buy houses and sell houses if the demand. I mean, this has always been the conversation in Auckland. I remember when I used to live there, something like 1,000 houses a week were actually needed to keep up with the demand. That was never going to happen. And until the supply outweighs the demand, prices are going to keep going up. That's a lost cause. Let's look at how to make it easier, better, safer, cheaper. Maybe some of the money coming in from the capital gains tax, by any other name, will actually end up going back to people on some level as a dividend or something to help them pay their rent. Maybe, I don't know, but to make it easier and better for people to actually be safe renters as well. That's because I'm not saying I've got a house, you go rent, go fuck yourself. I'm wanting us to be realistic about the so-called crisis and find a solution. And I don't think the solution they've put out there is going to do it. That's what it comes down to.
Awesome. There's a really good example, I think, of how you can kind of probably catch more honeys with bee. Sorry, honeys with bee. Yeah. Catch more bees with honey. I'm pretty sure that's how it goes, right? Yeah. So rather than kind of whatever other method vinegar. Thank you.
More flies with honey than vinegar is the saying.
Thank you, Pat.
You're welcome.
I need good people like you around me more often, I think. The thing is that, so here's an example, right? Going back, I don't know when the rules changed. It was a National Party government who made this, so we can give them credit for something perhaps today. They made a rule change a while ago where you were able to claim more of the donations that you made to a registered registered charity. You were able to claim more than just $500. Previously, you'd be able to get a $500 tax credit. No matter how much you gave to a registered charity, you'd only get $500 back. They made a rule change so that all donations to a registered charity were a tax-deductible expense. Now, if you are quite into giving, if that's important to you, and I'd suggest that anybody who's trying to be wealthy, you really want to try to be generous before you're wealthy, not afterwards, because they're absolutely connected. But putting that aside, that one little incentive that, oh wow, I can actually be not rewarded, but just not penalized as much if I decide to give to the Red Cross or give to the SPCA or whatever it is. If I donate to them and I'm getting a tax credit to offset the fact that I already paid tax on that money before I gave it to you, that's awesome. I'm now incentivized. With property ownership, and I want to talk about the future of ownership, full stop, if I may, after that. But with property ownership, what if there was some sort of incentive on landlords to actually have extra tax deductions or credits to actually help out their tenants?
Sure.
Landlords probably feeling a little bit burnt right now, to be honest. It's probably and I'm not speaking from my own perspective, but there's been a few people that I've spoken to who kind of feel like, what the hell just happened last year? My own income dropped.
But that could come through the government, not straight out of their pocket. In other words, that would be coming from when houses are sold. So yes, it would be something from them, but it could be not straight out of their pocket. That could be done
No,
easily.
what I'm talking about is the tenant. Is there
Yeah,
a
that's
way
what I
that
mean.
you could-
I mean, you know, like we're working for families, going to groups who have certain age children at the moment. There could be another division in government that uses some of that money from the capital gains tax by any other name, and that could be driven back to some of the renters. So in other words, it doesn't come literally out of the landlord's pocket every week or every month or every year, but it comes out of their pocket once they've paid their tax on their profits they've made on their property.
Yeah. Like any rule, the more rules you put in, the more other rules you need to put in to work with the side effects of that rule, right? But I think that, you know, thinking about mom and dad renters for life, you know, generation rent.
Sounds like a gang symbol. Yo, what up, renters for life? Anyway.
So if that, maybe we do need to change our attitude towards that, but I don't know if that's just going to happen because we decide that attitude is wrong and we have to change it.
But you're right. Okay, you're right on that. It's not just going to change. But can I just say equally, what's not just going to change is the fucking housing market. So
well, here's where here's where I think that I worry about how my kids are going to get into the housing market, right? That's why I own 3 children and 3 rentals, because all I've done is I've front loaded it. I've bought all the properties that my family needs so that when they go to buy their first home, they're buying from mom and dad's portfolio. They're not buying in the open market, which, by the way, is
will you pay tax on that?
Predominantly, what's that?
Will you pay tax on that if your kids buy a house off you?
It depends on if you're selling it to them at a gain.
You should have your kids' names now. It'd be a done deal.
What's that?
You should have them in your kids' names now.
Yeah, well, the idea is buying your kid's first home at today's price is the smartest thing to do if you want to help them into the property market and you want to financially support them, because you sell it to them at what you paid.
Yeah.
So there's no gain. But the idea there, and that's what a lot of property investors, like mom and dad, to use a phrase of the everyday person, you know, like everyday property investors that I work with, will be buying properties not to speculate necessarily just on rising prices. Mm-hmm. They are factoring in rising prices, but in a different way. They're doing it because they're trying to shield their children from that, and they're trying to think about what's the smartest way for me to help my kid out.
But they're not going to get caught up in this. They're not going to get caught up in the new laws, because that means if you're buying them for your kids, you're keeping them for 20 years.
Yeah, well, they will get caught up along the way, because now they'll have to pay tax on the rental income, which means they won't be able to do as much.
So you negatively gear it. Done.
Well, negative gearing isn't a thing anymore anyway.
But if you don't make any,
cash flow is.
But negative gearing. Okay, what I mean is, so you make $1 less per year than you're paying in mortgage, and then you've got no profits.
Well, yeah, with the rule changes that are proposed, you're going to be paying, if you receive $30,000 a year in tax, and you're on the upper tax bracket, you could be saying goodbye to $39 out of every $100 worth of rent. So that does make it significantly harder. But what I was getting at is that I think we don't give enough credit to our kids to solve a problem that we haven't been able to solve yet, specifically around the future of ownership, not just the future of ownership with our homes, but the future of ownership full stop. And this is where things can get in the weeds real quick, but in an interesting way. What if you could take your home that you own right now, Pat? You're based in Dunedin, right?
I am. God's own, the loveliest place in the country.
Well done. Congrats. So let's say we take that home. Let's say it's worth $500,000. No, let's use some simple numbers. $999,000, and you have 3 children, and you want them to own a third of the property. $333,000. You tokenize your home. Take your property, convert it to digital tokens on a blockchain specific just to your home. And now you can give those tokens to whoever you want, but you can basically give it to your kids. Maybe one day they can trade that on a secondary market, and that now becomes a way for them to build wealth. Maybe they can buy tokens of their friends' properties in the future. And instead of us talking about these, I guess you could call it a digital thing where it's either on or it's off. You either own the whole thing or you don't. We're now talking about fractional ownership of property, because we've taken the core issue with property away, which is the fact that it's not divisible. If you could divide it, and if you could use a technology platform to do it in a decentralized and autonomous way, you've now not necessarily solved a so-called housing crisis, but you've now removed the issue of inaccessibility. You've lowered the bar. Instead of owning your own home, that's okay. I still own 33% of Dad's home. that's just one example that I can imagine, but there's so many more that I can't yet, right?
And you know what? This is probably the time to start talking about, as we kind of come towards an end, Ungaro Co, because what you've just mentioned, I have never thought of before in my life. But as a financial advisor at Ungaro, ungaro.co.nz, is probably the place that some people can go to actually, or as we've been talking about you as a podcaster, to NZ Everyday Investor, 142 episodes there, is the kind of place that people can probably come and hear your meanderings and hear your thoughts about how people could restructure and do finance, for the today.
Yeah, and that's exactly it. It's like, today the challenges are what they are. Tomorrow the challenges will be so much different, and we need new tools to develop new wealth in the new world. We're still focusing on old tools, and the people that we listen to in the media and our financial experts out there, they're coming from a different school, old school. And I don't think we can use old tools to solve these new problems. I think we need new tools. And I don't think we've yet seen them. We're scorning them currently. We're criticizing them. We're suspicious of them now, specifically crypto assets. However, there's something in it. And I think you ignore them at your peril. But our kids with those tools will possibly solve the problems that we haven't been able to yet. So I actually have hope. I'm fairly optimistic about solving this so-called housing crisis. Not myself, but I'm optimistic that once we actually allow the children to actually think for themselves, they'll figure it out.
Well, I believe the children are our future. Teach them well.
So do I.
They will know the way.
Let them lead the way, man.
Yeah,
that's right.
Hey,
who's Bobby Brown and who's Whitney Houston in this relationship, Pat?
I'm not going to go there. Hey, look, I think that's quite a nice place to end. I do want to apologise to all the people who let me scream at them for 5-minute periods there. But I just.
You didn't do that, Pat. Come on. You're all right.
But listen, as we were talking, there seems to be. We started this conversation talking about the macro issue of housing around the world, etc., and money and investment. But there also seems to be a macro and a micro within the country, and it sounds like you're talking about like the issue within a family, how to set your kids up and that sort of thing. If we expand it out a bit and think about, how to fix the country in this current climate. Again, I often go back to a household budget to think about a country's budget. And if for some reason I'd had a tough year and all my overdrafts were at their maximum and I was in a lot of debt, I would need to find new income to, start paying those back and getting back to a positively geared life. I think on a macro for the country, tax is one of those answers at the moment. And as I've been sitting here...
There's one other thing though, Pat.
Yeah.
Sorry, and really sorry to interrupt you there, but there's one really important thing that is missing from that piece. Yes, you're right. If we look at the country as a budget, there needs to be income coming in to pay for the expenses, and if it's not balancing, you need to make some changes. That's what you're saying, right?
Yeah.
There's a school of thought, modern monetary theory. It's not modern and it's not a theory, is what someone said to me recently. But what this is, and what you have seen, is that the Reserve Bank is generating new currency. We started with that. That is a new form of taxation which will become far more politically palatable than just raising taxes.
Right.
What we have in New Zealand right now is both. So we're raising taxes, but we're also diluting the currency. So that is an indirect taxation. We're robbing from the future to pay for today. Our kids will be paying for that.
Well, I'm very much about not about diluting the money. That's I don't want to have to. I am exaggerating here for effect, but walk down to my local dairy with a wheelbarrow full of money. My back's not up to that, so let's not go down that path.
Yeah.
But I was
Bitcoin.
I was just thinking. I talk to clients often with a marketing and kind of media consultancy, and I often talk about them and getting their low hanging fruit. And I wonder in the tax, let me just put this out there as we wrap up. I wonder in the tax world, and look, I'm not about let's grab as much tax as we can, but it would seem that there's some low-hanging fruit that I'm sometimes a bit confused as to why there's no tax there. Capital gains tax is one of them, by any other name. The cannabis one we've already talked about, there's two. I don't know why when we donate to charities, we then to get to claim some of that back. I don't know how much of the government gives money back from charitable donations, but that must be a chunk of money. Churches Churches don't pay any tax. Why the fuck? I mean, I get it. There's a historical aspect to it, but churches can start paying tax, and then there's the wealth tax or the death tax. When when you get an inheritance, it's basically like winning lotto at the moment for people who get it. It's not your money. I don't see anything wrong with having a 20% tax on that. I look, people are going to hear this. It's quite ironic because people are going to, if they tune into this on some periods, I'm going to sound like an alt-right ACT party leader member, the way I was shouting there. And now they're going to go, like he's a far socialist wanting to grab all of our money. But I guess that's what I do is I'm just like, let's look at this realistically and figure out how to solve the immediate. Like when we talk about issues, people often talk about the fence at the top of the cliff or the ambulance at the bottom. What they don't do is go, let's put an ambulance at the bottom whilst we're building the fence at the top. Ultimately, the ambulance can leave, right? But it can't happen immediately. We need time to build the fence. So what do we do today to solve the problem as quickly as we can to make that not be a problem in the future?
A stick and a carrot approach.
Yeah. Well,
right.
But no, that implies punishment, though. Like, it's like for a long time, and it's not so much now, but people were talking about, too many prisoners in prison. There's not enough space for prisoners. And I'm like, well, let's build more prisons, but let's bring in reforming the system to hopefully have those all empty in 50 years' time. We need a solution right now for the problem of overcrowding, but let's work on, figuring out the problem as to why people are in those prisons to hope that they're empty in the future. It's kind of doing both at the same time. Because if we just go for let's solve that problem that's going to take us 50 to 100 years, then we don't have the problem solved today. But if we solve the problem today, as we're solving the long-term problem, we can get the best of both worlds.
Yeah, and you're saying focus on the solution rather than the problem, right?
And there's two solutions. There's the short-term solution and the short-term problem, and there's the long-term solution and the long-term problem. And those two problems, short and long-term, are connected.
I think we've just solved the housing crisis, Pat. I'm pretty convinced.
Just remember, when you say housing crisis, you got to do air quotes.
That's right. My fingers are really sore, actually, from doing that all day.
Hey, listen, Darcy, it's been an absolute blast. I know that today has been really just talking about housing and the housing market. And to be honest, we didn't really even go into the finer details of what the changes are, but people can look up that for themselves and they can research it for themselves. Our whole conversation is based around those changes. I think we should get back together in a couple of months' time and just have a more general financial conversation.
I'd love to have a chat to you, Pat, about Bitcoin as well.
Yeah,
so that you
totally.
don't have to, get a sore back bringing your food, your money to the dairy.
I don't. Well, this is what I bring to the dairy now, and I just go click, click, Apple Pay. I don't know very much about it at all. I probably know 5% more than your average person and 95% less than anyone who's looked at it for more than a few days. Fantastic. So it would be good to have a chat about that in the future. Let's book that in. But as for today, I don't know if I feel like I don't need to go to the gym. I got worked up enough there to almost get a sweat up today. So I don't know if that's good or bad, but it's been fun. And before the puppy upstairs, who's currently looking after herself, starts screaming at me to come up and, play with her, it's probably a good time to wrap it up. And me just to remind people, let's show them on the old screen here if they're watching us. NZ Everyday Investor. As if people want to find out your podcast, 142 episodes there, and also Ungaro Co, Ungaro, ungaro.co.nz, to, I don't know, people want to go there if they want to chew your ear off and actually, get a financial advisor. Sounds quite flash.
Get 108 get 108 investment properties. Yeah.
Hey, dude, thanks for joining us. It's been a lot of fun, and we'll talk again soon.
Awesome. Appreciate that, Pat. Thank you.